So a company beat earnings and their stock drops. Here's why that keeps happening. Why has the market been punishing even strong reports in this environment?
I think expectations were high coming into this earnings season. A lot of excitement talk coming out of the AI spend world. And so I think investors expected a lot, and they got a lot, but clearly they wanted a lot more. So there was some disappointment here.
Okay, generally when earnings beat, but guidance spooks investors, what does that tell you about how fragile sentiment might be? And then how do you respond in terms of being an investor and the decisions you make from that point?
A company bombed on earnings, meaning the stock investors' immediate reaction was negative and they sold the stock and the stock went down. Doesn't necessarily portend doom from the stock. We've noticed over the last year, these aren't necessarily bad businesses that telling you that businesses got worse. What we're saying is companies that are fundamentally healthy, that something happened this quarter that was a one-off, that did not impact the long-term trajectory of the business. In those cases, we often see a recovery after a huge move down. So sometimes the emotions get in the way and people just want to get rid of it, and it can be overdone when news isn't received favorably.
So I'll ask you a simple question here to close this one out, Nolan. When you see a situation where a stock drops that you really like the stock, really like the business, tell me about how do you see that as an opportunity sometimes?
Yes, I do. If you've been following them, you like them, they have good products and good services, and you are comfortable that they're going to be around 5-10 years and better than they are today, then it's a gift if the share price is 20 or 15-20% lower than it otherwise would have been. Yes.
So we'll keep it simple, Nolan. When the good merchandise goes on sale, look forward, don't look away.
Grab a shopping bag, my friend.